Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Tuesday. It's October 24th. It's about 7:35 in the morning. The market is not going to gear up to open for another hour and 55 minutes, if my math serves me right. Now, my t-shirt today, I've been getting more birthday t-shirts. My birthday's on the 29th of October. Thank you for sending me more shirts. I appreciate it. Some really valued clients. But this is my tone today. I'm still slightly bearish, and in this video, I'll explain to you why. Also, don't go anywhere. Don't go anywhere after I do my analysis, because I'm going to talk about ATR. I'll review what I did in the VIP room yesterday. I gave you guys an ATR lesson, and I'll talk about Tesla and why I didn't let Tesla go yesterday, and explain to you more about my day trading and swing trading and the Telegram alerts. So make sure you stay till the end. Make sure to like this video, subscribe to this channel. Also, free trades on Telegram, rogerscott.com/Telegram. VIP room is still open. Don't miss out. It's not going to be open much longer. It starts at noon. You could find all the details, links below the video on the YouTube channel. How do you find my YouTube channel? You go to YouTube, you type Roger-Scott, and my videos will pop up. Subscribe to that channel and ring the bell. All right. That was a minute we can't get back. Now let's get into the market, and then I'll talk about Tesla and my alerts and how you can get most value out of it and reduce your risk. Because I know a lot of folks are just going wild, putting into trades without thinking, and that's not what you want to do. So right now, pre-open the market, the Nasdaq is up about 100 points, definitely beyond random. The Dow's up 145 points, slightly beyond random. Most of today's data is going to be synced to the earnings that are coming out, and I'll talk about that as well. You've got earnings coming out today. Oh boy. You've got, what don't we have coming out today? Google, General Motor. If this is bad, it's not going to be good for Tesla, by the way. Google, Microsoft. Those are two FANG stocks. And then tomorrow, you've got Meta and T-Mobile. And on Thursday, you've got Amazon. So you've got a lot of earnings. There's a lot of things on the table. And the problem is, I'm going to show you what the big problem is. This is the pink elephant in the room. Look at the 3-month chart right here. We're literally sitting at the 200-day moving average. Literally sitting at the 200-day moving average. And notice my t-shirt, bearish. Remember, anything below the 200-day moving average is bearish. We are sitting at the 200-day moving average, and we have 4 FANG stocks reporting in the next few days. If that doesn't make you nervous, I don't know what does. But that's not a good sign. Also, if you look at consumer discretionary, which I'll show you right now, it's below the 200-day moving average, and it didn't close at the high yesterday. And volume was okay, but price action wasn't great. If you look at technology yesterday, you will see that it's between the 50 and the 100-day moving average. That's not pretty. That's not beautiful right there. Now, communication has been holding up much better. But if you look at the broad market via the SPY, you'll see that majority of it is still near the 200-day moving average. So we have to be very careful. And I'll talk about sectors before I'm done with this video. The bond market is still trading below the 8-day EMA. I know this is a big rally yesterday, and this relieved some pressure from tech. But we're up only 11 ticks right now, and we're still trading below the 8-day EMA. So let's not get too excited. Let's see some price action above the 88, 78 level. That's what I want to see. Now, as far as Fed data is concerned, we've got the PMI coming out today at 9:45, so we're going to have to be very careful, and we definitely don't want to take any trades unless they're swing trades or we're exiting positions before 10 a.m. And I'll go over this again, but I don't day trade before 10 a.m. So if you see a trade coming through, there's a good chance that trade will be held overnight. This is on the Telegram channel that I'm giving free trades on. And tomorrow you have new home sales, but today the PMI is going to be the big factor. Now, let's talk a little bit about what's going on right now. Market participants are awaiting U.S. business activity. That's this report right here, the PMI. Very important report. Gearing up for tons of quarterly reports for big heavyweight names. And I mean big heavyweight names. Currently, there's a 98% chance that the Fed's going to do nothing this month. And there's a 24% chance that they're going to raise rates in their December meeting. But honestly, I think they're going to start raising again in New Year's. I think they want to see a end-of-year rally in the market. We're getting ready for some big heavyweights, including Microsoft, Alphabet, Visa, Coca-Cola. And right now, you may want to write this down. The expectation going into these big stocks is that earnings are expected to grow about 1.2% year over year. Now, if that number declines, that's very bad for the market. If this number increases over the next week and a half, 2 weeks, it's very positive. But right now, the expectation is 1.1% year over year. Today, as I mentioned, you've got global manufacturing PMI numbers. You've got October manufacturing standing at 49.5 compared to 49.8. We'll see where that goes. We also have service PMI. Now, this is not a huge report. The big report is going to be right here. The CPE number that's coming out. That's coming out on Friday, and GDP. But again, these reports are important, and the Fed does pay attention to them. We got manufacturing index will be reported today as well. Now, just so you could see here, there it is at 10 a.m. But again, doesn't even have a start. This is not a major report. But all of these things put together are important. Europe is up slightly, digesting important regional economic data and corporate reports. Everybody's waiting for the big FANG stocks to report. Survey revealed Tuesday that Eurozone activity reached its lowest point in nearly 3 years in October, reflecting reduced demand and broad-based downturn across the region. Sounds very similar to what we're experiencing in the U.S. And China. China closed higher, getting a little tailwind after the country's sovereign wealth fund bought exchange-traded funds to support the flagging markets. The central Hughes investment unit of $1.4 trillion bought an undisclosed amount of ETFs and declared its intention to expand its holdings further. Meanwhile, a report by Reuters on Monday said that China is set to approve slightly more than 1 trillion yen in addition sovereign debt issued on Tuesday as part of its Beijing's intensified effort to stimulate infrastructure spending. I'll see it when I believe it. And Nikkei also snapped a 3-day losing streak as investors scooped up beaten stocks. Gains were seen in material, non-cyclical, and tech stocks. Be very, very cautious with everything that's on the table, including Microsoft, Alphabet, Visa, Coca-Cola. Now, looking at Microsoft, just to give you an idea of what I'm seeing right now, Microsoft is actually not looking that bad. It's been very, very choppy, but it's trading above the 8-day MA and above the 50-day moving average. And there is a chance we could rally. Microsoft, I don't want to be on the opposite side of Microsoft. The other big one is Google. Google has been doing good. It's in the communications service sector. That one has been doing well too, and it's above the 8-day EMA. I think the stock is ready to go up, but again, I'm not going to trade it before earnings. You don't want to trade anything before earnings. And then you've got Coca-Cola, Visa, GE, and a bunch of other stocks. And then tomorrow you've got even more stocks reporting, but keep your eye on these stocks. In terms of sectors, the strongest sectors is consumer staples, energy, and communication right here. Consumer discretionary, which is Tesla, is all the way down here. It's not really doing really well. So be careful. And Amazon reports later in this week, that's consumer discretionary too. That will be very important. You got to be defensive right now. Be very, very defensive. And if you look at these sectors, you'll see that look at consumer staples. It's near the bottom. Communication is actually coming up. The two sectors that I like right now, if I was a betting man, would be energy and communication services. Energy is going to stay elevated while this war is going on. But right now, things are just not looking all that great. I mean, look at this. Russell, financials, semiconductors. Looks like they want to find a base here. But markets are not that bullish right now. And look at consumer discretionary. All right. So if I was a betting man right now, I would be going long energy and communication services. And retail would be a sell. And consumer discretionary and financial would be a sell. They're not doing really great right now. Be very, very cautious. Now, I know it looks like we're bouncing up here on consumer discretionary, but again, we've got earnings. We've got earnings, and we're sitting at the 200-day moving average. So you got to be cautious. Now, I want to talk a little bit about, I gave you guys a signal yesterday on Tesla. Now, first of all, the signal came in before 10 a.m. Anything before 10 a.m., it's not a day trade. If you get a signal from me on Telegram, this is important, pay attention. If you get a signal from me on Telegram before 10 a.m. or after 3:30, usually those are trades that I'm going to be holding overnight or liquidating. Usually I don't trade the opening bell day trading. So swing trades. Now, what's going on with Tesla? Why am I holding Tesla? Why do we let Tesla go all the way up? And First of all, whenever you're trading, you should always, and I explained this yesterday in the room, you should always have this little tool that's called average true range. This tool will tell you what the dollar value of Tesla is for every dollar, basically, this is the movement of Tesla. It moves $11 on average per day, right here. Now, we're long stock called Etsy. Short Tesla, long Etsy. And Etsy moves about $2.50. You don't have to be specific. So let's just say Tesla moves $10 and Etsy moves $2.50. Well, that means if you're still holding Etsy, for every 4.5 shares of Etsy, you need to have 1 shares of Tesla. So if you're just blindly buying 100 shares or 200 shares or 50 shares, you're not doing it right. You got to compare it to your other holdings. So the only 2 trades we're holding right now is Etsy long and Tesla short. Now, Etsy's range is about $2.40, and Tesla's range is about $11. So say 10, 50, $11. Well, what happens when you divide 11 into 250? It's about a little over 4. That means for every 4 shares of Etsy, 4 to 5 shares of Etsy, you need 1 share of Tesla. Now, I'm willing to bet that most of you didn't follow that, and most of you bought 100 or 200. You're just buying raw number of shares. Don't do that. Pull up the ATR here, average true range, right here. See average true range? It's available on every indicator. You could put it at 14, which is the standard setting. I like to use 10. It won't make much of a difference. Look, let me show you. It's 14 days. Oops. Oh, here's the 14 days. It's 1091 versus 1111. Don't get caught up in the details. Basically, Tesla's range is a little over $10. So let's say we're trading Microsoft, okay, compared to Tesla. For example, Microsoft's ATR, depending on which one you want to use, notice they're almost identical, 14, 10. That's why I just used 10. It's about $6.40. Tesla's is about $11. So for every 10 shares of Microsoft, you'd probably want to have about 4.5, 5 shares of Tesla. $11 versus $6, a little less than 2. Let's talk about IBM. I'm just throwing numbers out at you. Stocks out at you. It's $2. Tesla's at 11. $11 into 2, how much? About what, 5.5? So 5.5, 6 shares of Tesla for every 6 shares of IBM for every shares of Tesla. Let's say we're trading NVIDIA versus Tesla. NVIDIA's range is $15. It's higher than Tesla. Tesla's only 11. NVIDIA's range is higher by about 40%. So for every share of NVIDIA, for every 3 shares of NVIDIA, you got to have about, for every 10 shares of NVIDIA, okay, you have to have about 4 shares of Tesla. Basically, and you can eyeball this, $15, $11, see the difference? About 40% off, 35% off. So always look when you're ready to trade the shares in order to get it, because Tesla moves $11 per day. So if you're trading a stock like WBA, for example, just to give you an example, volatility is 1/11th of Tesla. So for every 11 shares of WBA, you only have to have 1 shares of Tesla. Let's say you're trading Lowe's. Remember we had Tesla and Lowe's? Well, Lowe's is $3.40. How many of this goes into $11? 3.5, almost 4. So for every 3.5 shares of Lowe's, you have 1 share of Tesla. Does it have to be a perfect science? Absolutely not. Absolutely not. It doesn't have to be a perfect math, but it's got to be close. Don't trade 1 share of Lowe's for 1 share of Tesla, because you're going to be you're going to have 3.5 times less exposure on Lowe's. So use the ATR, the 10-day or the 14-day ATR, doesn't really matter, to find out what your position size is so you could equalize it. Now, let's talk about Tesla. If you look at Tesla, Tesla is sitting at the 200-day moving average. Tesla is a consumer discretionary stock, and consumer discretionaries are one of the weakest performing sectors. Matter of fact, if you look at consumer discretionary and if you look at Tesla, you may notice they look identical. Let me put up Tesla back here. They look almost identical. I mean, seriously, look at Tesla and look at XLY. Almost identical. Both of these are trading below the 200-day moving average. They didn't close at the high yesterday. More importantly, Tesla underperformed earnings, and the last several months it had negative performance. Look at the downtrend right here. So to me, it looks like Tesla can hang around here and break a little more because there's really no support all the way till 177, which means Tesla is weak right now. And when we're swing trading this, we give this a lot more room than when we're day trading this. So I'd like to see Tesla come up and break the 8-day EMA, and we're not even close to there. So you have to adjust your positions, and you have to know whether it's a swing trade or not. Again, I'll try to identify them from now on. But generally speaking, if you see a trade before 10 a.m., that is a swing trade. If you see a trade after 3:30, it's probably a swing trade because there's not enough time to make money for that half an hour. I'm not scalping usually. So, and I'll try to identify them. But most importantly, ATR. ATR is your best friend when you have multiple positions. You want to equalize your smallest stock to your biggest position. That way you'll have an equal exposure. Now, before I let you go, word has gotten out that the strategy behind one unique trade move that allows us to target wins regardless of where a stock goes, this thing is hot. And now even the mainstream analysts are raving about it. Wall Street Journal wrote that this loophole can juice returns in any market. Seeking Alpha writes, excellent strategy to generate steady, reliable income. Fidelity says that this trick helps reduce risk. Even Investopedia declares now you can get paid 52 times a year. Man, I love this. Interested in hearing more? Of course you are. Just click the link below for all the details. And remember what I'm explaining to you on Tesla and ATR. Very important going forward into anything you trade. Use ATR to equalize positions. And yes, I'm still bearish on Tesla. I'll talk to you guys later. You know how to reach me. Email me at roger@rogerscott.com. You can also post your comment below the video on YouTube, and I will respond. And I'll see you in my VIP room at noon today. Bye.